Welcome to the Wall Street Crossover Show, sponsored by Admiral Markets. I'm with Craig Drake, standing in for the young Darren Sinden, who's away on holiday. Why he would want to go on holiday when we've got holiday weather in London, I don't know, but some people apparently do that. How are you today, Craig?
I'm okay, I'm very warm.
Right, we've got, I suppose, the Greek situation. Hopefully, the 11th hour has gone past midnight, and it's now 12:01, and it's a new day, and it's a new era.
Yeah, and we've kind of got this slightly interesting situation where, because of the kind of Greek referendum this weekend, the ECB and the IMF are almost directly negotiating with the Greek people. They're almost kind of circumventing Greek politicians, because ultimately it is the Greek people who have to vote on this to get it through. Those Tsipras, after the fresh proposals, has said yes, they should vote for these complete vote-fast. I think he realises that the game is up, and so he's kind of ceded, I think is the polite word, to the demands from Greece's international creditors. But it still comes down to this referendum. The last poll I saw, it was at 52% for no, but that poll was conducted before the cash machines ran out. And I suspect having all your cash machines run out is probably a bit of an unpleasant taster of what's to come if you do vote these things down. So I think as people realise that as their entire banking system freezes up, as they can't get cash out of the bank, as they can't go to the store to go and buy, a pint of milk, this is a kind of a taste of what's to come.
Milk,
yeah, indeed.
But the whole point, I mean, the actual what's happened here is that the government, which is the left-leaning government, which was, let's say, was anti-EU, has inadvertently driven the people back towards the EU. By its strategy, because it tried to call the EU's bluff, and the EU counter-bluffed that move.
Well, the EU is de facto their kind of alma mater, their nourishing mother. Without them, they're kind of going to starve. Okay. I think that it's literally that has happened this week, and they've realised that they are dependent on the EU, and the EU is much better for Greece than Greece is for the EU.
All right, well, let's see what we've got on the menu as far as the data release today.
Yeah, I mean, the problem with lots of this data that we've had this week is when the market's been so dominated by something big like Greece, the kind of sampling periods for these don't necessarily take into account current worries. And as you know, we saw kind of German retail numbers earlier this week, where German consumers have kind of been a bit spooked by what's happening in Germany. We've had some weaker manufacturing PMIs out this morning. Spain came in at 54.5 after expectations of 55.5. Which is still strongly into growth territory, still strongly above that 50% mark. Germany's manufacturing sector picked up. They had an uptick in new orders. The Eurozone as a whole strengthened up to 52.5 from 52.2, kind of a 14-month high. Of course, you've got Greece, so this is all this sampling happened before the kind of the Greece concerns. But there is a kind of interesting kind of play at the moment. If you look, yes, if you kind of take Greece as a kind of a separate issue and as a kind of a shorter, kind of a transitory thing, if they are going to get bailed out, we have seen, and it's slipped into the radar, because I think a lot of people are prepared for bad European news. A lot of people have written off Europe as being a basket case, but Europe has strengthened over the last quarter. Europe has pushed out some strong macro data, and we've seen improved credit conditions, we've seen improved lending to businesses, we've seen improved business growth, and there's perhaps a case that people may start to move out of more expensive, slightly highly priced US equities and start buying into value in Europe, because there is plenty of value out there. We've had kind of sectoral bear markets there, where we've had agnostic bear markets. People have just written everything off agnostically. But there is value to be found in Europe, and I think we're going to increasingly find that as we start to see this strengthening of data. I think we're going to see more and more people start to return to Europe.
Right, and just the QE there, even if it doesn't actually directly do anything, psychologically it's helped a lot.
Yeah, well, I mean, people look at what QE has done in the UK and what it did to the US. It was hugely supportive to equity markets, and whether you agree with QE or not, people are going to want to jump on that train.
Okay.
And finally, we had Sterling to give a bit of battering on UK kind of manufacturing numbers. It kind of took a bit of a hit on. We've got that stronger pound, and we've also got Europe. We've got a slightly weaker demand for exports, and so the Sterling took a bit of a hit on that. And that was slightly reflected in the financial stability report today from the Bank of England, where Mark Carney said that, you know, obviously a lot of the questions did focus on Greece. He said we have seriously minimised our exposure to Greece, but of course that sentiment is going to knock on, and I mean we saw that in those manufacturing numbers and that demand.
Okay, well the next slide is the movers.
Yeah, I mean again I keep just looking at the headline indices because this week has been agnostic selling, agnostic buying, just based on sentiment from Greece. But we saw that we had that, you know, the European stocks had their kind of stuffing completely knocked out of them yesterday, and they rallied again. And we saw the same in China. China's down again today. It's been a yo-yo of markets, just based completely on sentiment. I mean, China was based on central bank action mixed with sentiment, and central bank action trying to mitigate sentiment. But if you see here, this is entirely on this Greece deal. You know, people have they've sold hard yesterday, they've bought hard today, and it's just been, people aren't looking at value today, people aren't looking at fundamentals today, people are looking completely at sentiment, and that's what's happening here. Okay,
great. And next we're looking towards, I suppose, the US?
Yeah. Kind of looking at US stocks. We've got a few reporting today. Nike yesterday, we had the announcement that that Phil Knight, one of the co-founders, is spinning off his stake into a separate company, into a separate LLC called Swoosh, which is based on the old Nike Swoosh. So they're going to now be looking for a replacement chairman. And I've kind of picked out Ford and General Motors today because we've got US car sales data is going to trickle out through today. All the major manufacturers are going to start putting that out. They're hoping to see stronger kind of vehicle sales because we've had that lower inflation. We've had the kind of uptick in real wages. People are feeling a bit better off, and obviously we've got lower oil prices, which are, you know, people are more likely to go out and buy those big cars that the Americans seem to love so much. So I suspect we may see, you know, if we see that pick up in SUVs, in pickup trucks, we may see a bit of bullishness there. And I think in the pre-market moves, we have already seen a bit of bullishness from both Ford and General Motors.
Okay, great.
Yeah, obviously, as I said, the kind of vehicle sales coming through, but also you've got those ADP employment numbers because of the shorter week, because 4th of July falls on Saturday, so for markets to shut on Friday, which means that tomorrow is jobs day. So we're going to be looking at ADP employment numbers as a kind of a precursor of what's going to happen there. I think the expectation tomorrow is that we're going to have strongish numbers. You know, we're going to be in that kind of 220 zone. But anything seriously strong is going to start to raise questions about the Fed hiking. You know, as you know, and that's, you know, anything kind of 240 and above, people are going to start clamoring for the Fed to hike in September. But
so a bit vulnerable in terms of that data, especially at this particular time of the year with the holiday coming up.
Yeah, exactly. Yeah, and I think that's, you know, I think we're going to see. We've already seen lots of kind of US stocks rallying already in like Greek news. And so Greece, I think that sentiment is going to flow into the US markets. I think once the US is open, we're going to see a bit of strong sentiment there.
Okay, and the levels?
Yeah, I mean, I kind of picked out the kind of ones I talked about. Nike are up, Ford Motors, General Motors, they're up in pre-trading. General Mills kind of took a bit of a knock. They've got fourth quarter fiscal earnings out today. They're probably going to have reasonably stronger results than last time, but not quite as high as some analysts might have hoped for. Euro dollar, obviously, we're going to see a bit of euro strength today. Sterling, as I said earlier, Sterling took a bit of a knock on those slightly concerning UK manufacturing numbers, and those concerns that the stronger sterling is affecting exports.
So that was probably the main highlight, really, on the sterling.
Yeah.
It's surprising on the downside.
Yeah, exactly. Yeah.
Okay, well, that's thank you, Craig. That's it for the Wall Street crossover show, sponsored by Admiral Markets. We'll be back at the same time tomorrow, 1 p.m.
We will not.